Thank you very much. Thank you for staying and listening to the stories. I want to talk to you about Alligator Energy. We're a development and exploration company. We started life 11 or 12 or 13 years ago now on Alligator Rivers projects in the Northern Territory in Arnhem Land. We're still working up there. We have expanded into South Australia with the acquisition of the Samphire Uranium Project, the ISR, In-Situ Recovery Uranium Project, just south of Whyalla. And we have a large footprint of tenements over the Cooper Basin, looking for uranium in the sediments above the hydrocarbon basin in the Cooper. We also have some nickel cobalt in northern Italy, which I won't go into today because most brokers in Australia think that's just a management retreat. But nonetheless, we are interested in some energy minerals opportunities, both on our tenements and elsewhere. So talking about our company, we formed many years ago in about 2009 or 10. We have an experience base within the board, Peter McIntyre, who was the managing director of HUSAB, of Extract, who found the HUSAB deposit in Namibia, sold that on. We have recently acquired a new director, Fiona Nichols, who was the head of ESG for Rio Tinto. She was on the board of ERA and of Rossing. So we've got a background in the board that understand the business of uranium and long-term nature of the industry and the nuclear business. Myself as CEO, I have a background as mining manager at Olympic Dam, mine operations at Ranger, initiated the Toro Energy Company, which had the first fully approved uranium mine in WA just before a tsunami hit, and now with Alligator. So we've got a good background on the board of uranium and exploration and development. Now with our project at Samphire, I want to talk about the Samphire Uranium Project just south of Whyalla. We've pulled together a team to evaluate this project and take it forward. It's now at development stage. Our Chief Operating Officer is Dr. Andrea Marsland-Smith. So Andrea was one of the most senior managers at Heathgate Resources for 15 years, 2 stints there. So she has come in as the Chief Geologist. They discovered the 4 Mile project to add on to Beverley. Then they took that forward into production. She then ran the full operations, and then her last role there was running the government Indigenous relationships and the uranium marketing business. So along with Andrea, we've now got a team of managers under her to take the Samphire project forward. We also have an engagement with a marketing agent, Traxys, Kevin Smith out of Traxys in New York. And Kevin and I go way back because I had 5 years in the uranium marketing business myself. So we've pulled together a team that can take a development project forward. Now, the project itself, still relatively small, £20 million. But most ISR, in-situ recovery uranium projects, start at around £1 to £1.5 million per year. So in-situ recovery, for those who don't know, means you don't physically move the ground, the rock, at all. You have an aquifer, it can be saline, it can be fresh. You have sediments, the uranium is formed and deposited out within these sediments. You drill a series of holes, and usually in a circle or double lines. You put down an acid and a lixiviant. You dissolve the uranium like sugar in hot coffee. It goes into solution, and you brought it out. It's all about hydrogeology. There's no mining engineers in our company apart from me. The hydrogeologists are the mining engineers of ISR. Now, the beauty of this is it's cheaper. It's less environmental impact. The bad thing about it is you don't recover all the uranium. You average about 70% recovery. It is the largest production source of uranium in the world. All of Kazakhstan is ISR uranium. Wyoming is ISR uranium mostly. And of course, the Heathgate, the Beverley 4 Mile projects at £4.5 million a year are all ISR. So Samphire is an interesting proposition here. It's a new field. It's just to the side of the Gulf, about 4 or 5 kilometres inland on the flats where there's some 60 to 80 metre deep sediments. The uranium comes out of the solution, comes out of the solid area very successfully. So we've done the bench scale testing. But the next step for us is a field recovery trial. There is individual chemistry in every in-situ recovery project. So you need to do a field trial. So we're funded to do that. We're under the approval process for that now, and anticipate getting that underway early next year. We are expanding the resource. We've drilled all year. We're going to expand the resource and also lift the quantity of indicated resource up, because as most people know, You can only have 25% of inferred resource in a production schedule. You need to have indicated resource. So we're about to announce that in November. We're also going to update our scoping study, the first version of which in March this year was very cost effective and very economical. So we're going to put that out. We're also going to do an exploration target range because we are drilling in about 10 to 15% of the known channels in this area. So we've got a lot of expansion potential. So we're going to estimate that so the market's got an idea of what we believe is there. The key thing for us going forward is these steps of an updated resource, an updated scoping study, the exploration target range, commencing the field recovery trial early next year, and then a feasibility following on. So we're currently looking at companies to do the feasibility and a study manager to run that. We recently raised some additional funds. So we raised about 25 million in a placement and around 3 million targeting SPP, which we'll announce shortly. That'll take us through to a funding base of around 40 million. Now, that is needed. We're now at a development stage. We need to be able to achieve tasks on the ground. A field recovery trial is between $6 and $7 million. A drilling program for a year is $4 million or more. So you've really got to have the funds behind you to go through past the feasibility into the stage of approvals, which we're commencing now, and then into initial offtake contracts. So we've met with 25 nuclear utilities. There's a few of them that are already willing to discuss initial offtake contracts, which are conditional upon financing and approval. Now, it's a little early for us. We'll probably do that later next year during the feasibility, but it's very attainable to do that. That then supports the underpinning of that approval process and the financing of the project. We currently estimate that the second half of 27 will be first production. You've got to be realistic. South Australia has approved 5 uranium mines, all of which have operated. But it still takes 3 to 3.5 years to get a uranium mine approval in a state which is well regulated, very familiar with uranium, the public's familiar, everyone sees your trucks with containers of uranium on them on the road. It still takes that time, you have to accept it, all right? So that's our project. We're expanding the resource. We have an economic project. We're about to make it a bit more economic. We have the experience base. We have a big footprint for expansion. And we're underway and we're well funded. So thank you very much.
Thank you, Greg. A quick question. We'll get to Nick, but just a quick question. Like the uranium market, as a thematic, seems to wane, peak and wane at different times with investors, and most recently, like it's on everyone's lips, and it seems to be the thing that people are very, very interested in. Why do you think that this moment in time will be different for uranium companies?
Well, it might be and it might not be. Let's put it this way. The nuclear power business has expanded through the 70s and the 80s and has basically stayed there. There's some shutdowns and there's some growth. Growth in China, shutdowns in Europe. That's essentially what we've seen in the last 20 years. Now we're seeing growth in Europe, a little bit of growth in the States, more growth in Asia, growth in the Middle East, 4 reactors operating in the Middle East now, and about 16 planned. So there is a growth path, but it's it's easy to predict. You know how much reactors burn up, you know their utilisation factor. The demand is easy. The issue is it popular or unpopular? You have a tsunami, you have a hydrogen explosion in a reactor, not a nuclear explosion, and therefore you have a public which don't like nuclear power for 8, 9, 10 years. We have 3 reactors right now in a war zone in Ukraine. So you've got a risk right now. Will the public in general around the world say, yep, we're fine with that, we know we need nuclear power because of climate change? I don't know. So I'm being honest here, all right? This business does wax and wane. I've seen 3 peaks and troughs in the industry in my career, and there's been 4 at least. So all I know is this. There is a supply-demand fundamental that uranium is in demand right now. The spot price peaked at about 73, it's back down to 69. The long-term price is 62. That's supporting every currently operating mine in the world. No question about that. It is also supporting the startups, like Boss, who've done a great job, like UR Energy in the States, like Peninsula in the States, like Encore, like Energy Fuels, they're all starting up because this long-term price of $62 is supporting them. So a smart company makes sure they've got some other alternatives as well as this. We are in uranium for the long term, there's no question. But we've got some nickel cobalt leases. We're looking at rare earth potential in our clays in Arnhem Land because they're highly ionic weathered clays. We're looking at lithium in condensates in the Cooper Basin at our Big Lake project, which is a greenfields uranium project looking at the sediments over the top of the Cooper. And that's because those sediments over the top of the Cooper are exactly the same sediments, the Namba, the Aire and the Cretaceous, where Beverley, Honeymoon and 4 Mile sit. So you've got to look at new opportunities and you've got to make sure you've got some protection on the downside. So that was a long-winded answer to a short question, but it just covered off on the fact that the industry is complex and you often don't know how the public or the market will view an industry.
I guess like any industry, I really wanted Nick to have the opportunity to ask you a question very, very quickly though.
Yes, quickly. You've still probably touched on this a bit already, but I was specifically referring to, yes, there's the market is volatile, but the fact is uranium, it hasn't never reached the pre-GFC levels of over US 120 a pound for various reasons, but the market probably at the moment is in the best state it's been from a pricing perspective in the last decade. Do you think maybe perhaps in the medium term, by the time we get to the point where the project is in production, as you said, the second half of 27, we might, perhaps maybe we might be back to those good old pre-GFC days again?
Look, I think that once you've got a pricing structure between $60 and $80 a pound, that supports startup of projects. And so it then depends on whether nuclear utilities will not forget that mines shut down and their prices go up. So therefore, they will keep offering good long-term pricing for long-term contracts. I heard Cameco speak recently and they said, lots of people telling us we need to expand our operations, put more uranium out. And they said, we will expand our operations when we get long-term supportive price contracts that cover our cost of capital and a profit for our shareholders for duration of what you want or what we want. So in other words, it is up to producers to say, this is what we need for you to get uranium for 7 or 8 or 9 years. So it's always been difficult when you have a hiatus in the market which disrupts that. So let's just see. It is an important fundamental right now that long-term production must be paid for to support what you want as a return. And that's where the fundamentals have got to come in. So it's going to be beholden on CEOs like myself to hold the ground and say, we need this.